Welcome to our channel, where we bring you insights from the world's top investors to help you navigate the complex world of finance. In today's video, we're diving into 15 mistakes that every investor makes, according to the legendary Warren Buffett. These are the kind of mistakes that can seriously harm your investment portfolio, so make sure to watch until the end to learn how to avoid them. Let's get started. Mistake number 1. Focusing on short-term market movements. Warren Buffett is known for his long-term perspective, and one of the biggest mistakes he warns against is obsessing over short-term market fluctuations. Many investors panic and get distracted by daily price fluctuations and news headlines when the market dips and make impulsive decisions. Buffett advises focusing on the long-term health of your investments instead of getting caught up in daily market noise. Mistake number 2. Following the crowd. Another common mistake is following the crowd. Just because everyone is investing in a particular stock doesn't mean it's the right choice. Buffett's advice is to be fearful when others are greedy, and greedy when others are fearful. Making investment decisions based on herd mentality can lead to buying high and selling low, which is a surefire way to lose money. Buffett emphasizes the importance of independent thinking and thorough research, and this approach helps investors avoid hype-driven losses and make more informed choices. Mistake number 3. Not understanding what you're investing. Buffett has always emphasized the importance of understanding your investments. He's famous for saying, "Never invest in a business you cannot understand." If you don't grasp how a company makes money or what drives its growth, you're more likely to make poor investment decisions. Always do your research and invest in what you know. Mistake number 4. Overestimating your ability to pick stocks. It's easy to believe you can pick the next big stock, but Buffett warns against overestimating your abilities. Even the best investors make mistakes. Instead, consider diversifying your portfolio and, if you're not confident in your stock-picking skills, consider low-cost index funds, which have historically outperformed most individual investors. Mistake number 5. Trying to time the market. One of the biggest mistakes investors make is trying to time the market. Buying low and selling high sounds great in theory, but in practice, it's incredibly difficult. Buffett recommends a strategy of consistent, long-term investing rather than trying to predict market movements. Time in the market is more important than timing the market. Mistake number 6. Ignoring costs and fees. Many investors overlook the impact of costs and fees on their returns. High fees can erode your gains over time. Buffett advises looking for low-cost investment options to maximize your returns. Always be aware of what you're paying in management fees, trading costs, and other expenses. By minimizing costs, investors can keep more of their returns and improve their long-term financial outcomes. Mistake number 7. Being overconfident. Overconfidence can be a major pitfall for investors. Just because you've had success in the past doesn't mean you'll always be right. Buffett suggests staying humble and recognizing that investing is a lifelong learning process. Always be willing to learn from your mistakes and adjust your strategy when necessary. By staying grounded and acknowledging the limits of your expertise, you can make more prudent investment choices and avoid costly errors. Mistake number 8. Failing to diversify. Diversification is key to reducing risk in your portfolio. Buffett often emphasizes the importance of not putting all your eggs in one basket. While he's known for making big bets on a few companies, he acknowledges that most investors should spread their investments across various sectors and asset classes to mitigate risk. Mistake number 9. Letting emotions drive decisions. Investing is inherently emotional, but letting those emotions dictate your decisions can be disastrous. Buffett advises maintaining a rational, disciplined approach to investing. Don't let fear or greed push you into making hasty decisions. Instead, stick to your investment plan and make decisions based on data and analysis. Mistake number 10, Not having a clear investment plan. One of the most significant mistakes is not having a clear investment plan. Without a plan, it's easy to get lost in the sea of information and make inconsistent decisions. Buffett stresses the importance of having a well-defined investment strategy that aligns with your financial goals, risk tolerance, and time horizon. Your plan should guide all your investment decisions. Mistake number 11. Failing to reinvest dividends. Reinvesting dividends is one of the easiest ways to grow your wealth over time, yet many investors fail to do so. Buffett has long advocated for reinvesting dividends to take advantage of compound interest, which can significantly boost your long-term returns. By reinvesting dividends, you are effectively buying more shares of the stock, which can lead to exponential growth over time as those additional shares generate their own dividends. Mistake number 12. Chasing high returns. Many investors get lured into the trap of chasing high returns, often by jumping into the latest hot stock or sector. Buffett warns against this and often says, "It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price." High returns often come with high risk, and chasing after them can lead to significant losses. Mistake number 13. Lack of patience. Patience is a virtue in investing, but it's something many investors lack. Buffett's success is built on the principle of patience, waiting for the right opportunities, and allowing investments to grow over time. Impatience often leads to buying high and selling low, a recipe for poor returns. Mistake number 14. Ignoring inflation. Inflation is an often overlooked factor that can erode your investment returns over time. Buffett advises considering how inflation might impact your investments, particularly with cash and bonds, which can lose value in real terms during periods of high inflation. Diversifying into assets that can outpace inflation, like stocks, is crucial. Mistake number 15. Not continuously learning. Finally, one of the most significant mistakes is not continuously learning. Buffett is a lifelong learner, constantly reading and expanding his knowledge. The investment world is always changing, and staying informed is essential to making wise decisions. Never stop educating yourself about the markets, the economy, and new investment strategies. That wraps up the 15 mistakes every investor makes, according to Warren Buffett. Avoiding these pitfalls can set you on the path to financial success and help you build a more robust investment portfolio. If you found this video helpful, don't forget to give it a thumbs up and subscribe for more insights from the world's greatest investors. Let us know in the comments which mistake you'll be avoiding in your investment journey.